Crazy about my money. Crazy about my money.
Welcome to M.A.L, Moagi Accounting Lessons. My name is Mr. Moagi, and today we are focusing on introduction to balance sheet, the statement of financial position. Balance sheet. So your balance sheet will look like this. Normally, it will look like this. Then you have the column for your amount. Normally I'll put the R to show that we are dealing with rents. It can be any currency, but now that we're in South Africa, we're gonna use R for rent. So the most important thing before you start anything is to understand the structure and the format of your balance sheet. So I'm gonna take you through the structure of your balance sheet. So your balance sheet, here we're dealing with the assets and the liabilities and the owner's equity of the business. So your balance sheet will look like this. The first thing first, we need to focus on assets. Assets. So under assets, we have what we call non-current assets. So we have two types of assets, which is non-current assets and current assets. So under non-current asset, we have what we call fixed or tangible assets. Now here we're talking your vehicle, your equipment, your machinery, furniture. Then we have that, and this is note number 3. Let me just put a column here for notes. This is note number 3. Now the value of your assets will be shown here. Total value of your assets, you will reflect it here. You put the figures here. So note number 3, of course, there's a note number 3 and there's a way on how to compile a note number 3 or to complete a note number 3, which is going to be a step that we're going to be focusing on our next video when we do notes. For now, I just want us to focus on the structure of the balance sheet and what is expected of you. And then the following thing, or another thing that falls under non-current asset, is what we call financial assets. Now financial assets, we're focusing on your fixed deposit. Fixed deposit. At this moment, you might be having an idea what is a fixed deposit. A fixed deposit is simply the amount of money that you put in the bank and you invest in the bank for like a long-term period, for a long time, a period of 2 to 3 years, not to 3 years, but 2 and many more years. Yeah, so that's your fixed deposit. Then here is how we complete our fixed asset. So for us to know how to compile and finish everything, all we have to do is to, I'm gonna draw a box here. Now we're gonna add our non-current assets together, which is fixed or tangible asset and fixed deposit, and then now we'll have a total non-current asset. Then the next step is what we call our current asset. Now under current asset we have inventory. Our inventory, this is just the stock that we have in the business, your trading stock. So the value of your trading stock at the current moment, you will show it here. Now your inventory is node number 4, which we'll also deal with that when we do our notes, followed by trade and other receivables. Trade and other receivables. You show the total trade and other receivables here. Easy, in and out. This is basically your node number 5. And we also have cash and cash equivalent. Cash and cash equivalent. So we have our cash and cash equivalent. Now on cash and cash equivalent, of course, like I said, we have your petty cash, cash float, bank, the cash that you have at that moment, the value you put it here. This is basically your node number 6. Now that we are done with our current assets, I'm going to draw a box here to show that we are going to be adding all these current assets so that we know the total value of our current asset. So we add all the current asset, which is inventory, trade and other receivables, cash and cash equivalent. I didn't explain the trade and other receivable. Trade and other receivables, these are basically the amount that you're expecting to receive. For example, debtors is a very good example of our trade and other receivable. You gave your customers goods on credit, and then you are expecting to receive money back, which is receivable. Yep. So that is a good example. We'll engage and explain more into it when we do our notes. Now let's get back to our format. Now we add all our current assets together, and then the total you put it here. This is our current assets, total current assets. Now we want to know the total assets. For us to know the total asset, what are we going to do? Very simple. You simply add your non-current asset and your current asset. This will take you straight to our total asset. It will give us total asset. Then you write the figures here. Perfect. Now we're moving right along with our structure and our balance sheet. Now the following part of our balance sheet is equity and liabilities. Equity and liabilities. Now, equity and liabilities, under equity and liabilities, we have what we call owner's equity, Now, under owner's equity, we have what we call capital. Capital, this is note number 7. As we know, capital is the money to start the business. So capital is note number 7. We'll also discuss capital more when we do our notes to the balance sheet. And then for grade 10, we only have capital under owner's equity. However, for grade 11, we have what we call current account, because grade 11 is partnership. Current account, that's where we show a division and sharing of the profit for partners. So this is grade 11. I'm just going to put it there to show that this is grade 11. Then slash, for grade 12, we have what you call retained income. So I don't want you guys to be confused. This is grade 11. This is grade 12, retained income. Because grade 12, we're dealing with companies. Retained income will deal with that when we do our note. So these are basically note number 8. So for grade 12, we have retained income, but we don't have current account. For grade 11, we have current account when we're dealing with partnership, but we don't have retained income. So this is partnership, this is companies. So that's basically that. We will deal with the account separately and the notes separately when we do our notes. So for now, this is the structure. Put it into account. And then moving right along, we are done with our owner's equity. You show it there. Then you're gonna add both our owner's equity, and we show the total owner's equity here. Adding the total, put it just right there at the top. Now, the next part is non-current liabilities. Non-current liabilities, here we have your long-term liabilities. These are your long-term loans, long-term debts. An example of a long-term debt, we have a mortgage loan. Mortgage loan. We all know what is a mortgage. At this point, we should be understanding what is a mortgage. If you don't, we'll deal with that as we dwell in the notes. Another example of a non-current liability or of a long-term liability, it can be just a long-term loan. This is like huge amount of loan that you take and you have to pay it back in a period of more than a year. That's a long-term loan. So the amount for mortgage bond, you show it here. And the amount for long-term loan, you show it here. Then you are going to add your non-current liabilities. At this point, I only have 2 examples. You add them together, then you're going to have your non-current liabilities total. I hope we are still on the same page. We are moving. Now the next step is current liabilities. These are liabilities or short-term loans. These are liabilities that you have, or the company or the business is going to be paying in a period of 12 months or in less than 12 months. Those are short-term loans or short-term liabilities. Now, under current liabilities, we have what you call trade and other payables. Trade and other payables, this is note number 9. So we'll deal with that, of course, when we are dealing with the notes. Then the total trade and other payable, you put it there. The total value of what you are owing and is to be paid, or it is going to be paid in a short space of time. You put it there, the value. Now, an example of a trade and other payables, that will be your creditors your suppliers or the suppliers that you are buying from on credit, which we call them creditors. And then none other than trade and other payables, we have current portion of the loan. Current portion of the loan. This is just the portion of the loan that you were owing, as if you paid it this year, you must show it under our current liabilities. That value, we put it there. And then we also have what we call bank overdraft. Bank overdraft, you must put it there as well. So those are just simple examples that I can come up with for now. And then what we're going to do, we are simply going to add our current liabilities. So we have total current liabilities figure. So we're going to add 1, 2, 3 at this point, which will give us the current liabilities. Now, at the end of the day, we need to see what we call total equity and liabilities. Total equity and liabilities. How to get your total equity and liabilities? You're simply going to add your owner's equity. You're also going to add your non-current liability, and then you're going to add your current liability. Adding 1, 2, 3. Owner's equity, non-current liability, and current liability. The total, you take it as it is, you put it there on your total equity and liabilities. Remember, your liabilities are made out of current liabilities and non-current liabilities, and equity is just equity. That's why we call it total equity and liabilities. Now it makes sense. Now, in simple terms, why we call this a balance sheet is because according to the way we know it, it's supposed to be total asset is equals owner's equity plus liability. So the figure that you find here, if it's 10, which means total asset should be 10 as well, to show that your balance sheet is balancing. Because according to our accounting equation, they say total assets is equals to owner's equity plus liabilities, which means if we have 10 here, we're also going to have 10 here when you combine your owner's equity plus liabilities, and then your balance sheet is balancing. Now if you have any questions, you may leave your comment and then I'll deal with you directly. However, for more information, join us on our next activity when we do our notes, and then activities after activities for better understanding. Thank you very much. Don't forget to subscribe, like, and share.